Welcome back to AlgoBot, where we break down automated trading strategies for MetaTrader 5 in plain, practical language. I'm your host here at AlgoBot, and in today's session we're studying an expert advisor called Choppiness Regime Breakout. This strategy is built around the Choppiness Index, a bounded indicator that measures whether a market is coiling sideways or traveling in a clean direction. Over the next few minutes, you'll learn how it detects a market shifting out of consolidation and into a trend, how it confirms that move, and how it manages risk. We'll also read through the actual code together. Just a quick note before we begin. Everything here is educational information only. So what exactly does this expert advisor do? Choppiness Regime Breakout is an automated strategy for MetaTrader 5 that focuses on one specific moment in the market, the transition from a quiet, range-bound phase into a trending phase. Rather than trying to predict direction from a single reading, it waits for evidence that the market has been coiling and is now genuinely breaking out. The engine behind it is the Choppiness Index. This is a bounded, non-directional indicator, which means it does not tell you whether to go up or down. It only measures how the market is moving. It compares the total distance price has traveled against the overall span of the recent window. When the reading is high, around 61.8 or above, price has been whipsawing sideways inside a range. When the reading is low, around 38.2 or below, price is traveling efficiently in one direction. The strategy looks for a market that was recently choppy and has just turned trending. Because a low reading alone is not enough, the approach layers on several confirmations. It requires a structural breakout of a Donchian channel, agreement from an EMA regime filter and its slope, and an expansion in volume on the breakout candle. Only when all of these align in the same direction does it consider an entry, and the rules are fully symmetric for both long and short setups. This kind of strategy is designed for traders who are studying trend continuation and breakout concepts and who prefer a rule-based, automation-friendly framework rather than discretionary decisions. It can be applied on whatever single time frame you choose to test. As always, keep in mind that this is educational information only, not financial advice, and that all trading carries the risk of loss. Let's break down the exact logic step by step. The expert advisor works only on closed bars, checking its conditions once each time a new bar opens, so its decisions never repaint. Before anything else, it makes sure enough history has built up for every component, and it checks that the current spread sits below a maximum ceiling. If the spread is too wide, it simply stands aside. The first condition is the coil. The strategy scans the most recent bars, defined by the CoilThreshold parameter, and asks whether the Choppiness Index printed above the CoilThreshold, which defaults to 61.8. This confirms the market was genuinely range-bound and storing energy. The second condition is the release. The Choppiness Index of the just closed bar must now sit below the trend threshold, which defaults to 38.2. Together, conditions 1 and 2 describe a regime shift, coiled recently, trending now. The third condition is the structure break. The strategy measures the highest high and lowest low of the prior bars, set by the BreakoutLookback parameter, forming a Donchian channel. For a long, the just closed candle must close above that prior high. For a short, it must close below the prior low. The fourth condition is regime agreement. Price must be on the correct side of the EMA, and the slope of that EMA, measured over the last few bars, must point the same way. This helps filter out counter-trend breakouts. The fifth condition is participation. The volume of the breakout bar must expand above its own average by the volume multiplier, which defaults to 1.3. Genuine breakouts tend to carry volume, while quiet drift-throughs usually do not. A long entry needs all 5 conditions bullish. A short entry needs all 5 bearish. Nothing is stacked. The strategy holds only one position at a time per magic number. Now the exits. When a trade opens, the stop loss is placed at a multiple of the average true range, defaulting to 1.5 times ATR, away from entry. The take profit is set at a fixed reward-to-risk multiple of that stop distance, defaulting to 2 to 1. On top of that, a chandelier-style trailing stop follows the trade using ATR, and it only ever tightens toward price, never loosening. Position size is fixed fractional, scaling the base lot with account balance and capping it at a maximum. All of this is rule-based and fully automated. Here's the actual MetaQuotes language 5 code that drives the expert advisor, shown as it appears in MetaEditor. At the top are the input parameters. You can see the choppiness period set to 14, the coil threshold at 61.8, and the trend threshold at 38.2, the two levels that define the regime shift. Below those are the Donchian breakout lookback of 20, the EMA period of 50, the ATR period of 14, the stop multiplier of 1.5, the reward ratio of 2, and the volume multiplier of 1.3. Now look at the two signal lines. The long signal is true when the closed candle is bullish. Its close is above the prior Donchian high. Its close is above the EMA. The EMA slope is positive, and volume is confirmed. The short signal is the exact mirror. A bearish candle whose close is below the prior Donchian low, with close below the EMA, a negative EMA slope, and the same volume check. Because both are Booleans built from identical parts, the strategy stays perfectly symmetric. Just below, if the long signal is true, it calls open trade for a buy. Otherwise, if the short signal is true, it calls open trade for a sell. Inside that function, you can see how risk is handled. The stop distance is the ATR stop multiplier times ATR. For a buy, the stop sits below entry and the target above. For a sell, the stop is above and the target below, at the reward ratio times that stop distance. Finally, trade.buy or trade.sell sends the order with the stop and target attached. Let's walk through an illustration of how Choppiness Regime Breakout reads a chart. On the price panel, you can see the candles, a blue EMA regime line, and a Donchian channel formed by the upper and lower boundaries. Below the price, the gold line is the Choppiness Index, moving between 0 and 100, with the choppy zone shaded above 61.8 and the trending zone shaded below 38.2. Look at the first several candles on the left. Price is drifting sideways in a tight range, bumping against the upper and lower Donchian boundaries without making real progress. Each candle opens and closes near the last, and the body sizes stay small. Now notice what the Choppiness Index is doing beneath them. It climbs up into the choppy zone, well above 61.8. This is exactly the coiled, range-bound condition the strategy waits for. The market is storing energy, and no entry is taken yet. The strategy is patient here on purpose. Now watch the fifth candle. The Choppiness Index drops sharply, falling all the way below 38.2 into the trending zone. That single move is the regime shift. The coil is resolving into a directional move. At the very same moment, this candle closes as a strong bullish candle above the prior Donchian high, breaking the ceiling of the range. Price is above the rising EMA. The EMA slope is pointing up, and the breakout candle carries expanded volume. All five conditions now agree, so the buy entry marker appears, and the stop-loss marker is placed below, just under the swing low of the range. From there, follow the next couple of candles higher. Price pushes cleanly away from the broken range, and the chandelier trailing stop follows behind, tightening as the move extends. Price reaches the take-profit target, set at 2 times the initial stop distance, and the long trade is complete at the take-profit marker. Notice how the whole move flowed from the transition. The market coiled, then released into a clean run. Now the chart shifts into its second phase. After the rally, price stalls near the highs and begins to chop sideways again. Watch the Choppiness Index. It climbs right back up above 61.8 into the choppy zone. Once more the market is coiling, this time near the top of the move, and again the strategy simply waits and lets the range build. Then comes the downbreak. On the 11th candle, the Choppiness Index drops below 38.2 again, signaling a fresh release. This candle closes as a bearish candle below the prior Donchian low, breaking support. Price is now below the EMA. The EMA slope has rolled over to the downside, and volume expands on the break. Every condition lines up on the bearish side, so the sell entry marker appears, with the stop-loss marker placed above the recent swing and the take-profit sitting at 2 times that distance below. Follow the final candles down. Price falls away from the broken support. The trailing stop steps down behind it, and the move reaches the take-profit target, completing the short trade. What this illustration shows is the heart of the approach. The strategy is not chasing every breakout. It only acts when the market has genuinely coiled, shown by a high choppiness reading, and then clearly released, shown by that reading dropping into the trending zone, with the Donchian break, the EMA, and the volume all confirming the same direction. Long or short, the logic is completely symmetric, and every decision is made on closed bars, so nothing repaints. That brings us to the end of our breakdown of the Choppiness Regime Breakout Expert Advisor. Today we covered how the Choppiness Index measures range versus trend, how the strategy waits for a market to coil and then release, and how it stacks a Donchian breakout, an EMA regime filter, and a volume check before taking a fully symmetric long or short position. We also walked through its ATR-based stop, its fixed reward-to-risk target, and its chandelier trailing stop. Remember, everything in this video is educational information only and is not financial advice, a recommendation, or a solicitation to trade. All trading involves the risk of loss. If you found this helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with a strategy you'd like us to examine next. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.